Yep, I'm just putting on some final touches right now. As you see, I'm in my remote setup. We'll get started in just a second. What's good? Oh, hey, what's up, Millie? All right. Are you driving? Okay. I got my close people here, so let's go ahead and ease into this a little bit. Okay. So we're trying some things new here today. We're trying a different connection, a little bit less in the way of things, not on a VPN this time. Also going to be doing this on Discord, TradingView, and YouTube. So we'll stop driving. Don't be watching while you're driving. You can listen. Uh, yeah. All right. We're definitely going to look at Bitcoin and Tesla, 100%. So thanks for joining early. I know a lot of people like to stream in slowly as things go along. So we're going to hit all those topics. Let me make sure that I can see people's comments if they're watching on Discord. Jen, how are we doing on all the different mediums? Let me look at the different places to find out. Yeah. So I think we should be good. I think things should be recording. And yeah, all right. So, okay. Going to ease into it. So, has been an interesting week, to say the least, even though not much has happened. And by that, I mean we are pretty much past the big event that happened last week, at least in crypto, had the big flash crash. Definitely want to touch on that. In fact, everything that people are looking at now, growth, which includes Tesla, that is 100% what has been on everyone's mind. There's a lot of concern, fear, uncertainty, doubt, FUD going on in there. There was actually a reason for me to go long Tesla today. And as we come into the close right here, it looks like that long's actually held. That long has actually held. The big thing that has been up for debate this week has been growth. And if the growth narrative is going to be sustained. Now, if you notice from the thumbnail that I put together, when I was younger, loved to play Mortal Kombat 2. I'm just going to go out and say that's probably one of the most perfect games out there. But now the kids have whatever they're talking about. But there has been a battle on Twitter, not really personal battle, but and I actually misinterpreted this battle between this guy named Puru Saxena and of course Cathie Wood. Now, who is this Puru Saxena? He's come to my attention. You know what? I'm going to go ahead and follow the guy because he's become of note. And yeah, he is someone that is a retired money manager living out of Hong Kong. I don't think he's from Hong Kong originally, but that's a big money center of Asia. And he has been really questioning the growth narrative. At least that's what I thought. And sometimes I jump to conclusions. I admit that. And I'm very happy to have Mr. Cuz that has, on more instances than just this one, told me, hey, hold on, slow down, Norak, slow down. I know you're flying off the handle. You got this in your head. You're going crazy about something. Actually sit down and listen to what this guy had to say. And so he sent me this video.
Jay's new crap album.
Oh, I don't want to hear the advertisement. That's because I don't pay for this one. So this was a long form talk that he did. And I really don't like the title. The looming stock market correction. Come on. I mean, this kind of stuff turns me off. I know it gets a lot of clicks from people because everyone wants to hear about what's about to go wrong, how bad things are. But it turns me off because I'm like, I'm not going to get anything out of this. I was wrong. I sat down and I listened to what this guy was actually saying. when he is saying that he is going short, when he's saying that he is actually betting, he's not actually betting against the market. He is long lots of growth companies, founder-led growth, etc. And that's what he made his money on. He talks about his strategy being hedging. In other words, he's willing to give up some money on a rising market as we have right now in favor of protecting what he has from the downside. So that when the market does come down, if he has a short position in what he prefers ETFs, because they're diversified, then he will not take on much of the downside. And this comes from him being a trader for a long time. After I watched and listened to him, I realized that he is a kindred spirit. He's a trader with about a decade and a half more experience than I have. And he's also in kind of the same phase of what his investment philosophy is. He's not necessarily now trying to get those big YOLO gains. He's trying to preserve wealth, which is very similar to the risk aversion that I sort of operate in too. So I really liked him. Glad that Cuz pointed this out to me to look at, and I had a chance to really, really actually sit down and listen. And so what I thought was a beef between he and Cathie was really him just making a comment. I'm shorting Cathie's funds, the ARC funds, as a hedge because he sees those as the most overhyped. And maybe he's right. Maybe he's right. But I'm going to get into why I went long Cathie's fund, specifically ARKK, here in just a moment. But first, let's back up a little bit. Almost, yes, a year. There was a Bloomberg interview, December 18th, almost a year ago. I remember this specifically because this was when not only was Cathie at the height of her popularity, she's still popular now, but also, of course, her funds were at the highs that they were at, so they kind of go hand in hand. But she had let's see if we can listen in on this real quick. I think it was at 3:20. This is really key. I'll link the things in the chats and stuff like that if you want. But let's see if we can hear what she has to say.
They're not going to be stopped. We can't stop progress. And today, when the government tries to stop progress, well, it usually fails. And so even if we go through a correction, and I expect one, we must almost always expect corrections. I just have to keep my eye on the prize. But I do want to warn investors that, you know, in the investment world, it's not just straight up and to the right. You know, we will have those corrections.
So one thing that she talks about even before that was her personal self-realization that following periods of extremely fast growth in her own track record as a trader, she often has a big drawdowns because the nature of her strategy is for exponential growth, and these things are volatile. They come back down. Yeah, I know. Yeah, a bunch of people in the Cathie Woods fan club on the Discord definitely watched that interview, and it stuck with me as things were going along. That yeah, eventually, her funds were going to have a correction, so it's no surprise. And so that's where this TIF comes in, and I made a post about it when we were talking about it earlier this week. And the reason that I really took interest was, yes, to be contrarian. Basically, this was yesterday, December the 9th, where Puru added to his short. Now, if you're familiar with the way that I trade, what I look for the technical side of things is I'm looking in any kind of trend for something to pull back 50%. And so it's interesting that at this moment where there's all this debate about what her funds are going to do, we are sitting at that level. In addition to that, it did what I like to see. This is the level right here. Which it actually looks like it closed at just today, about 96.39, let's call it. And it spiked down and came right back up. And now it's coming back to retest it. This is a key moment right here. This is worth taking it as an opportunity because you're at a major level. It made a reaction to the level. And so you know that if it breaks below the December 6th low, and that December 6th was Monday, If we break Monday's low, then you can get out. And so you can assess where the risk needs to be here. So, yes, I am long the ARC funds off a technical level. I have a little bit, I'll admit, I have a little bit of ego invested in this, but that was before I knew what I know now, where it's not really my battle to fight. And all ego should be removed from trading. So we'll see. I'm admitting it to it now that a little bit of me wanting to prove technical analysis is good. But you know what? It's low risk. If it works, I get to say, haha, technical analysis works. If it doesn't, it's just another trade. So small risk there. And of course, she is, and these funds are going to be related to what's going on now in pretty much all growth. Everything's been in growth has been getting hit. All the EVs have been getting hit, and of course, Tesla. Now, Tesla did triggered an alert this morning. It did a spike at the beginning, got in, I got out, and then I got back in again because it was holding these morning lows. And so I got in somewhere about the 980s, and I'm holding on to this. We're going to see if this thing holds. Tesla, likewise, if you measure from the last run that it made way back to the launch point, which I usually take right before the trend, it hit it here, and so far it's holding itself. Again, another place where I know where my risk needs to be, and I can take a position. Now, why are all these growth things faltering? Well, the primary reason out there right now is because on everyone's mind is the Fed going to raise interest rates. The premise that all of this bubbliness, all this growth is built on cheap money is true. I mean, there's a lot of low interest rate credit that is floating around there that's being pumped into these growth companies chasing after yield. And that's what's causing a lot of the rise in their stock prices. And that's the theory that most people are adhering to now. And so the theory naturally goes when the Fed begins to taper its money printing, the printer going burr, I need to get a soundboard. I need a button that says for whenever we're talking about that. All the good podcasters stuff, even CNBC guy Kramer has a soundboard. Going to look into getting that. But when that stops, and that was actually one of the big gist that Puru talks about. Again, very good talk. Go find it. Where he talks about he studied the markets in the past. He studied the past taperings. And one thing that he said that really resonated with me because I was trading through it was the 2018 around Christmas, the Christmas crash of 2018. And so that was coming off of a year which, let's see, this is the beginning of 2018, January. First couple of weeks of January were absolutely crazy. This was following a post-election year. Here's where Trump was elected. And post-election year, just a up and to the right, followed by a big rally towards the end into the first of the year. If you're looking for a crash condition, I've said it all year long. I've said it all through 2021. It's a normal year. Now, no year is normal. But it's been like a lot of years in the past that I've seen where quarter one was a little crazy, volatile. We had that with the squeezes, with the GMEs, the AMCs. Summer, slow. October, a lot of superstition. No crash, though. And then a Santa Claus rally, which it's debatable if we're having that. We had that. We'll see. We're still in the month of December. But as I pointed out, the year 2021, every single month, except for December, has posted a new all-time high. So I don't know if this is going to be the combo breaker or not. I'm going to go ahead and wager on the side of yes, we're going to make a new all-time high because we're just so close and the gravity just kind of pulls upwards when it comes to all-time highs, it seems sometimes. But 2018, very crazy year. You want to talk about a hard year to trade. I mean, just look at the difference between 2017 up and to the right versus 2018. Stark contrast. This is where people, they're trying to be traders, will be tested. And we haven't seen this since 2020. All the people that got into trading in the last year and a half, they've never seen this kind of a market before. But it's coming. I don't know if it's going to come next year. Probably will. But there's a lot of good trends in here, but there's a lot of bad trends, especially if you're on the wrong side. You have to be ready to go in and out. And this is finally the year when all those people that I criticize for loving to take their SPY puts may actually have a shot. Because in a year like this, the VIX goes crazy, volatility is really high. You actually have meaningful multi-week bearish trends, and you can make a lot of money playing the downside of the market. This is when you save your puts. So just wait. Just wait for a market condition, something like this. But towards the end of the year of 2018, the Fed did begin to start tapering their money printing, whatever they call it, quantitative easing, whatever, lowering their balance sheet, blah, 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 blah. And the market reacted very negatively. And then what happened with the market reacting so negatively is they turned it back on. They announced, okay, we're wrong. We're going to start printing more money. We're going to start doing whatever they were doing back then. And the market responded positively, and it went up again. And that was what happened right around Christmas that year, coming off of a rather volatile year. So you really need to watch and see what happens and how the market responds to it. But you gotta remember that people are trying to price in this tapering when most expect it to happen in November. Like the consensus, like if there's polls, and they also base this on the implied volatility of the dated options. The Wall Street consensus is that the Fed tapering will happen November of next year. So almost a year from now, almost a whole year from now. And then when the market drops like this, or when growth takes a dip, people are saying, oh, it's because they're pricing in that tapering. The market is supposed to be forward looking. Yes. Is it that forward looking? I guess, if you want to have something to write about. So that right now is what the narrative is. And that's why all of your high flying growth has pulled back, and there's a tremendous amount of fear, uncertainty, doubt, FUD around growth stocks. EV, there's one that I've been in, and man, I tell you something, it's interesting. LCID was another one from this week. Again, it's pulled back to a 50% level. So I like it from a technical standpoint, but man, the ego behind some people. I've gotten a lot of strange messages from people that are bragging about their puts. And it does not affect me one bit, because I know if you bought puts into something with this high IV, you're an idiot and you don't get to make any money anyway, because you don't understand how options work. So it's not like you're going to affect me by saying that I'm wrong, because I'm wrong all the time. But at least I know that you are not going to make any money if you're right, because you don't understand how options work on these kind of stocks. So good luck in that education. So again, now that we got some more people floating in here, if you have questions, if you want to look at some specific things, just post it in the chat. Discord, looking good. TradingView, also good quality. YouTube quality is always kind of flaky, but without the VPN, looks like we're doing pretty good. So yes, let's talk about Bitcoin. That's a light troll. Come on, you can do better than that. Come on, Gen X Bear. So Bitcoin. People ask me on a daily basis about Bitcoin. Same thing that I've been saying for weeks, for the last 1, 2, 3, 4, 5 weeks. It should have broken higher. It should have gone. If in every single time, where did I post that? Did I post that in Discord? Let's just go through this exercise again. So every single time that Bitcoin broke a major high or an all-time high, this is the weekly we're looking at, by the way. Every time it broke it, it did so with really proper momentum. that high, this high. It respects it, but it doesn't leave any room for doubt. And you can go back and you can look at every single high that there was. Now, of course, in 2017, there's a little bit of debate. It hit it there, kind of faltered a little bit. But if you really felt bullish about Bitcoin at $1,400, oh my God, Bitcoin was $1,400. Yes, it was. It was cheaper than that, believe it or not. If you really felt bullish, you had plenty of time to jump in and ride it up for its next meteoric wave. And people are getting very, very impatient. They don't want to miss this. But we're looking at the weekly here. It's sped up, but it's very hard to sit there for a week and, be that patient. So as you see, it was very easy at any point in these weeks after it broke the all-time high with emphasis to go long and make a bunch of money, and hopefully you sold it at the exact right point because you got a crystal ball, or you held, because who wouldn't want $19,000 Bitcoin, am I right? But this isn't, I don't know Wyckoff distribution patterns. I'm only casually aware of Fibonacci's. My technical analysis is very, very simple. And I believe that all technical analysis is a reflection. It's a way to try to quantify people's emotions within what you see on a chart. And people are bored, both with this and Ethereum and everything else. But of course, the two majors are going to be Bitcoin and Ethereum. And I talked to someone while I was driving them to drop them off at an airport the other day. And this was we'll call him, not insultingly, an amateur investor, someone that had just gotten into crypto in the last year. And they said that they had gotten out of their Ethereum a few weeks ago, to which, long-term or die-hard believers would scoff at. But, he said very simply, it was very succinct, that, well, I've been watching it and it just hasn't been doing anything. So I sold it. I spend all this time drawing lines and doing patterns and things like that. But really, what are we modeling here? We're modeling this lack of enthusiasm. And you need that unbridled enthusiasm. You need that I'm going to be a millionaire before the end of the year 2021, six-figure Bitcoin before 2021. How many people are still holding out for that? All these things that people hoped would happen. You need people to think that their money is going to double or triple or 100x in order for them to buy it after something has gone up this much. That's what has to push things to these next levels. You have to have this rampant enthusiasm. And either you talk to somebody that is not really that well-versed in technical analysis or investing or anything, and they're just kind of like, I'm bored with it. Or you do the charting and everything like that. If you remove the biases from it and you just look at it and you say like, this thing should have gone higher. It's given me a lot of rejections of this level. It's very simple. And the best part about it is if I'm wrong, if anyone's wrong to take profit, to hedge, as I like to do, when I talk about crypto, I don't, if I say that I'm short, it means that I'm net short. Okay, so that means that I'm hedged against the downside, kind of like Puru does. So figure out ways to do that. It's really easy to do it if you're not an American, so I'll leave that to you. But if it does break the high, remember, we looked at those past all-time highs and the breaks in the past. You had weeks and weeks and weeks of big, thick, bullish bars to get back in. So if you actually do have it break, you're not going to miss much. What are we going to miss? What are we going to miss if we don't buy it now? If we wait until it comes up to here, we're going to miss 20%, which in the grand scheme of things, for people wanting it to go to, I don't know, 100,000, whatever you want it to go to, that's a rounding error. Okay? It's not that big a deal. On the flip side, buying into it now, you just have the biggest risk in its history. That's what an all-time high is. It's the biggest risk it's ever had. So you can get a better gain out of that. So that's what I think about Bitcoin and Ethereum right now. It's not really the risk reward on the long side is just not there unless you really go out looking for people that tell you what you want to hear, that it's going to go to some astronomical number, which they don't know is going to go to that number. I mean, they're pulling it out of their ass. So, I understand people when they're trading something like the one I'm still short, which is Shiba, when they're trying to go to a penny, 1 penny, or they're trying to be in Doge. They were trying to take Doge up to $1. It's the biggest folly in investing is having a round number that you're looking at because everyone's looking at that. Doesn't make you special. The market doesn't care what your number is. It's a really bad idea to have a certain number price that you're gonna. It's good to have targets, but not something so obvious. That's what I'm saying. Not something so obvious. And so, yeah, a lot of people still hold on to that Shiba. I don't know, maybe a penny. So again, any questions? Any questions in the comments here? Keep it going. I think I had some topics to talk about. Spike reversal pattern on the bonds TLT. Okay, yeah. So that's one thing I want to talk about. I talked to some people asked me about spike trading. Let's use this as an example. So this was a spike that I got earlier this week. This was not today, but yesterday. So what happens here? Again, spikes are very simple. They're price swinging in one direction and then swinging back the other. People get into something short, it comes back up. Now they may be forced to get out. And the best part about this is it sets up with a place that I can put my risk. If I know if it breaks this bar where there's a lot of trading, that's where I want to potentially get into it at. And so on this one right here with TLT, it's not, I mean, do I think it can get to 155? I'm hoping it will. That would be ideally what I want to get to. The first target would be 151. Can it break the resistance? Well, as I talked about in that idea, and this was actually credit to a friend of mine, bonds have a sort of cyclical nature in their price action. And so if this thing is going up and down, I would actually say yes. I would actually have to say that if we were looking at if we're looking at how it's doing with higher lows and higher highs, then I would say it should follow some kind of trajectory like that. So 155 being the resistance, the high here, I think if it's going to get there, it's going to probably break it, because from the standpoint of it making highs here around 151 and breaking it here, this would be, if it goes, the swing high to go higher. So yeah, I would be okay with you trying to play that break, but in the short term to establish this position, I really want to see it try to retest this high up here. So more like around 152 is what I'm targeting with the current risk reward. So, yep. So let's see. Let me make sure that I'm not ratting somebody out. Let me look back. There's a message that somebody took to me earlier. If you have anything to look at specifically, let me know. But let me make sure. Okay, this doesn't give away anything. So let's do this. Don't want to reveal any personal information. So this was a sheet, a commission sheet that somebody sent me looking at their commissions year to date. And they have done well. They've made about $2,000 in their account. They've taken about 833 trades. These are options. And they've spent about $1,200 in commissions, more than half their profits. And I thought this was really extreme. But then I actually looked at the fee structure for this brokerage, Fidelity. It's like 65 cents per contract. And so if you take 833 trades, you're taking over 100 a month. Yeah, I can see that is actually going to actually start costing you that much. And what I told him, and this I believe this is true, if you get to a point in your trading where you are above break even or even at break even net commissions, you've actually hit a milestone. You should be proud of yourself, especially if you're only a few years in. Now, it's not ideal. You wanted to make more than that. But you got to think about a lot of people that get into things, they just completely blow their accounts. You didn't do that. You actually made money. Okay, so you did that. Now your next step is to beat the benchmark, whether it's a SPY or it's whatever else. But I would also say you should try to beat inflation. These are all little milestones. So I would not fault anyone or say, oh, you're doing anything particularly wrong. Maybe you're trading a little bit too much. Maybe there's a more optimal way that you can trade rather than taking on this much in commissions. But really, this got me to thinking about the current state of trading and why short-term options, weekly expiration options have become so popular. It actually kind of gets to me a little bit because I keep trying to tell people. I had the benefit of growing up from early age, not early age, but early in my career trading long-term options because weekly options weren't really a thing. I didn't even, I saw weekly options on the SPY and maybe on some things like Apple. I asked my mentor at the time, like, what are these weekly options? And he said to me, do you see me trade them? I was like, no. Well, there you go. Not the best answer, but it was an answer. And up until about 2020, they had some really bad liquidity. Now they're better because there's more people trading them. But if you think about it, what did the market do? The trading market, the commissions market. The commissions on these brokerages went to zero. So if the commissions went to zero, how did they make any money? Well, one way is they sell data. Okay, they did that and they got a little bad PR from that. The other way is in commission that they can still charge, which is at 65 cents an option. By the way, when I started trading options, they were $15 a contract each way. Let that sink in. And then as time went on, and I actually had to call them and say, "Hey, this brokerage does this," it went down to $7.50, and then it went down to about $2.50. And of course, now it's a buck or less. You should not ever pay more than $1 for the close and open, by the way. But still, when that happens, what are brokerages to do when they're used to making $15, $30 per trade? Well, what they have done in the past is they've gone to trading educators, the people online selling their courses, selling their programs, talking about, here, do this, trade the 1 minute, trade the 5 minute, trade the moving average crosses, trade, because the more people trade, the more commissions they generate. And so these educators would get kickbacks from brokerages because they're teaching people to trade in the most commission inefficient way possible. That used to be a big revenue stream for trading educators. Fast forward to today, the internet's out there, trading educations, it's there, but you can get more free information. What I see instead, and this is me, I don't like going down the realm of conspiracy theories, but I don't know it for a fact, but I just know it's true that as short-term options, as weekly options have risen in popularity, the brokerages have done nothing to dissuade people from using them. In fact, there's probably a little bit of encouragement out there. This is me going down the rabbit hole conspiracy theories, but not too long ago, someone asked me, "Hey, do you think that those hedge funds and people, do you think they've got Wall Street Bets accounts? Do you think they have Reddit accounts?" Yes. If you're thinking about it, if you're in the markets, if you're about the same age as these people are, they know about Reddit too. And so it would, if I'm going to go down the rabbit hole of conspiracy theories, I can say that there's probably somebody out there that's posting these fake results because they can go into a brokerage and make a screenshot about how this weekly option they took made them so much money. And it gets other people, just like playing the lottery, showing people winning those things, even though it's statistically impossible to win the lottery, making people think they're going to make money off of weekly options so that they trade more weekly options and generates that commissions and keeps these brokerages in business. Hey, they provide a good service. They let me trade. They let you trade. They should stay in business. That doesn't mean you have to play their game. And so if go back and look at your commissions, wait till the end of the year, and don't let it change what you're doing if you're making money, but start to think about things a little bit differently. I think if you're looking back at your trades, you should look at what works and what doesn't. Do more of what works and less of what doesn't. But when you start, I did this. I went down the realm of, oh my God, I'm paying so much in commissions. What can I do to reduce my commissions? Because you feel like, well, that's something I can control in my trading, right? It doesn't really address the real thing that's going to solve your trading issues, which is make more money. Just make more. Make it where it doesn't bother you. It shouldn't be your primary focus, trying to cut back on your commissions. It really shouldn't. It feels like it because that's like a thing you can point at and you can say like, oh, well, that's something that I didn't do. That's something that they're charging me for. No, your actions are what dictates your results in the market. It's just that it's a lot easier to look at that brokerage and be like, ooh, they took that much money. That's not something that I did. That's something they did. So it's you can address it by looking for ways to trade more efficiently. But don't let that be your primary focus because that's a mistake. That's not going to make you a better trader. It's not. So let them compete over commissions. Just don't play their game. Don't play their games. So, yes, $7 per trade used to be a big thing. All right, Ethereum question. Let's see. So Ethereum, Siam, I just talked about it. Same thing as Bitcoin. It should have gone. It should have gone. You had this big all-time high, and it's basically messing around here. It's kind of key this weekend. I know I say that a lot. It's key this weekend, this whatever. But this spike right here, there's a lot of different narratives as to why this happened. A lot of them around weak hands. I think it's so funny that in financial journalism, whether it's the mainstream CNBC stuff like that, or in the little more niche crypto space, they all talk about the same things. They all have the same memes. And one of the things was, well, in this crash, long-term holders didn't move. Okay, that may be true, but it still dropped that much. And so what it does is it creates a point where you can see that's where the weak hands were. That's where the liquidations happen. Okay, I'll accept that. But what happens below that? Well, what happens below that's not good by any stretch, because you took out people that had their stops and were over leveraged here. But where are the people positioned below that? And at that point, you start to actually make lower lows. And so as we sit right now in Ethereum, again, this is not financial advice. We are sitting at the bottom of a range. If you were to try to buy here and play this range as a short-term trader, I'm not going to be mad at you. If you tell me I'm a short-term trader, I'm trying to swing, this is my style, this is my market, okay, go, do you. If you're trying to get 9,000 before end of year, like everyone was looking at, you're way too optimistic, okay? What do you think about 2022? It's between here and here. It's between 4,850 and 3,400. This is the range. Look for a weekly bar to close above or below that range, and you'll know which way it's going to go over the next year. That's about the best that I can say right now, and that is just my opinion. I want everyone to have all the dreams that they want, but like I said earlier in the live stream, you may have missed it. The excitement, it has to be there for this thing to go. And I really question who is left to buy into this. And the answer I always get is, well, just wait till more Latin American countries adopt it as currency, or wait until X things happen and institutions get involved. Well, I'll tell you this right now: the institutions that are involved they're as involved as they're going to let on and tell you. Okay, whenever you hear about an institution talking about being invested in crypto, they've already put their position on. They don't make these announcements. They don't admit to these things for your benefit, for you to digest and analyze and make an informed decision. No, they put them out there as PR to talk their position. So if you hear that a fund is getting invested or getting into, no, they're already in it. And more likely than not, the reason they're putting that out there is because they're trying to take out their position into strength. They're trying to get you to buy their book. That's the game. So don't think that when you hear this information, it is necessarily in your favor, that is something new, because not only are you reading it, but everyone else. So be careful what you hear. And that's why I try to avoid all of the mainstream press about this kind of stuff. I mean, I think that what it's doing right now is setting up for exactly what you need to know for it to go forward. And that's been the case. I mean, I've not been right all the time about crypto over the last decade, but usually I've been able to see where the danger points are, where things are going to potentially launch. And right now, it's really not bullish to me. If we start to break higher and 2022 ends up being this crazy year that everyone's hoping for, maybe so, but it needs to really break with some momentum. And the thing is, who's left to buy? Tell your grandmother to buy some Ethereum. Get the boomers involved. Maybe you'll get 9,000. Yeah, boomers. The boomers. Yeah, you got to get the boomers to buy it. Good luck. Good luck. I can't get my mom to use her cell phone to do more than text. So, yeah, you really have to think who is going to buy into Ethereum and crypto. Who's left to buy? Who's left to buy? So, we talked about commissions. We looked at the growth stories. We looked at the crypto market. What was the thing? What was the other things in Discord that we talked about? We were going to talk about stream here. Well, one thing we talked about in Discord today, and by the way, I run a Discord. I'm plugging it. It's free. It is absolutely free, by the way. I apparently had someone overnight impersonating me. They even took my little stockbroker troll icon and started telling people, "Good day, sir." You know, who the hell talks like that? You know, scammers. This one I read. People sent me the screenshots, and this scammer at least broke with the script. Uh, I can tell it's not me. People that knew me could tell it's not me, but it unfortunately did take someone, and it's sadly ironic because I did sort of roll out a alert that I'm testing out for the smart money people on the Discord, but I don't charge people to be that rank. That rank is people that are active, people that I know, or they're talking and conversating. And I know that cuts out a lot of people that want to be quiet and just read, but I don't know who you are. If you want to talk to me privately, that's fine. But you got to make yourself known that you're an actual active trader and that you're smart, and that the main thing I don't want is someone having these alerts, these spike alerts that I have coded in TradingView, getting poured over Discord. I don't want them to come back and say, like, well, I saw this 1 minute spike at 3 a.m. on lean hogs, and I went long that future and I lost money and I blame you. Okay, so I want to avoid people doing stupid stuff like that. So that's why you have to be smart money. But I don't charge people for it. But people are offering this premium service because, man, I hate that. How do people go to family gatherings? How do people go home to Thanksgiving, or I don't know, I guess Diwali, because it's in India, if I'm stereotyping? Or how do they go home to these family gatherings and kiss their grandmother, and grandmother says, like, what have you been doing for work? And they say, well, Gigi, I've been scamming Westerners of money on the internet. And then she's like, good for you. I just don't see that happening. I mean, how do you answer that? How do you wake up in the morning, drink your coffee and say, like, I'm a good person. I'm going to be a thief today because that is what I should be doing with my life. I don't understand that, but that's what people do, and I really hate them. I reserve that right, that word for extreme, but I just you're wrong. You're not a good person. But anyway, that happened today. So I don't charge anything. So if anyone comes and says that they're me and they're trying to charge for anything, it's not me. It's definitely not me. I can't even get people to talk me into taking money for donations. So definitely not me taking people's money. So yeah, AWS going down, crashing that one crypto exchange. Well, um, I don't really do much with American crypto exchanges. So don't know much about that. What was the other thing? I made a note. Oh, I wanted to put into video this. Someone asked in the Discord again. And that's where I do a lot of talking um, every day, sharing trades when I take them, and also answering questions. Someone brought up the question of like, well, I got this option that is down to like 5 cents. Should I hold it? Well, early in my trading career, there was a thing that I saw in Monster energy drink. Now, I used to really like Monster, and then I let people convince me that it was going to kill me. But oh man, their Monster was it the Zero, the white can? Oh, so delicious. So let's go back and look at here. Let me tell the story. So right here, we had earnings. This is 2014, six ancient years ago. And Obama was still president, if you believe it. And they had earnings on the 7th of August, which I believe was the Friday before expiration, August expiration, monthly expiration, normal options. And the week goes on. You got a nice rise after earnings. Good, good, good. But it's not really breaking any major highs for the quarter, for the weeks. And so there's probably some people out there, because this is Thursday, August the 14th, 2014, where, there's people out there. Let's bring up the option chain for them. Excuse me. Going to use Think or Swim. Think Back, one of the best tools out there for options trading, because you can do this. Go way back, and I can look at the prices of options. August. These are closing prices of options. If you're clever, you can actually see the intraday if they have the data on major stuff. But you had a 1 day till expiration, 15th of August, 2014, right here. And let's look at a few more strikes. So yeah, there was a 75 option. I remember looking at this, because what you can do is you can go back on the day before and you can look at the option times and sales, and you can see I saw that someone had taken, I believe it was 1,000 of this option. There was a trade done at 10 cents the day before, like towards the end of the day, like in the 3 o'clock hour. And so someone thought, well, there's two sides to every trade. The person selling thought, okay, I take this 1 day option, I get $10,000 out of it, because is that right? Yeah, 10 times 1,000, yeah, math. And all I have to do is hold it for 24 hours, and I'm going to just make that money, easy money. And someone else, probably a broker or something like that, was thinking, okay, we'll do it. But we're going to hedge it with shares. Or maybe someone was clever enough to say, you know what? Why not? I'll take, I'll put $10 and we'll see what happens. But I don't think many people do that. But I know there's a 1,000 lot order at this 75 strike the day before. And then that night, Coca-Cola announced that they had something like a 25% stake. Hold on. 2014 Coca-Cola Monster Stake. August the 14th. That came in. What time did that come in? Doesn't have the time of day. Oh, there it was. Oh, advertisement. 5:26 p.m. Eastern time. So an hour and a half after the close, they announced that they took a big stake, and the next day it opened up 29% on a big cap stock. That is huge. And those options, that 75 strike went from 10 cents to the day of expiration about $19. So it went from $10 to about $1,800, $1,900. Quite a move in either direction for whoever was on the side of that. And so what that did early in my career, because I started doing it professionally in 2013, is it showed me the danger of selling naked short calls. So that's not something I'll ever do. But it also, along with that and some other instances, showed me the value of holding options, long options until expiration. I know it sucks because it's a low probability that these are going to actually come in the money, but maybe once a year, maybe twice a year, if you do it consistently enough, one of them is going to possibly shoot up in that last week. That's going to bring you back into profit and maybe the best winner of the year. That's the nature of options. It's the gamma acceleration effect is what they talk about. And so bear that in mind. I didn't have this happen to me, but it happened to somebody out there in the market, and I learned from it. And it stuck with me ever since. And so this is why when I take options, even if they go underwater, the good thing about buying options is that you know what your risk is. The premium you paid is the risk. Now, you can have a mental stop, but it doesn't really make sense because let's say you buy an option for $1, $100, and it goes down half to 50. Well, you have $50 of risk still on the table, but you still have that unlimited upside that you had initially. Let's just say that you were looking for that option to go from $100 up to $3, make it 100% or 200% profit. Okay, so you still want it to get up to that level. You still want it to get up to that $3 level from $1. Okay, so if it comes down to 50 cents, well, what you have on the table still is just 50 cents because it can only go to zero. But instead of having it go from $1 to $3, in other words, give you a 200% return, now you can go from 50 to 3, and that's what, a 500, 600% return, math. So your reward risk actually increases when you're long options and you hold them that long. You got to think about it that way. But it does suck because the probability of winning is lower. So, any last questions? I can hear the puppy dog wanting to play. So I want to go attend to that. So appreciate you all joining. If you're joining later, I do this every week. Try to join us for some questions. If you also are joining later, or if you're just enjoying this, join the Discord. Come talk. Come be active. I'm doing some cool things with indicators. I'm not opposed to programming something that you like, actually, that I think has value. So it helps to keep me engaged and keep me sharp. So that's why I have it. Give me ideas and share ideas. Can I touch on the ideal expiration time window length since you're on the subject? Oh, where's this question? Oh, thank you. Okay, I'm not trying to ignore you. I just saw your AWS question. I ignored the rest of it. Options is an art. So I'll speak to this. So with ARC, in addition to buying shares, and we'll pull out Ichimoku here. In addition to buying shares, I also took a 130 June call. So as a general rule, what I like to do is think about where can this go in the money and when. Let's be reasonable about things. I think someone asked in the chat if Tesla could go to $1,300 by the end of next week. So basically 1,300 by Next week would be about like, okay, so where's next week? December 17th, yeah. So Tesla could do something like this as of yesterday. Maybe, but not likely. Okay, so that's a no for me. That's a no. I mean, because even under the most optimistic, let's just chart out what's the most optimistic that this thing has done in the past? What kind of trajectory? So if it did some kind of a meteoric rise like that, well, that would possibly put us out there. But how likely is that to happen? Not saying it can't, but for me, I want to give myself a little bit of extra time. And the further out you go, it costs more, but at a decreased the scale is different. Okay, so let's say it takes to go a month out, it costs you $1 on the option. To go 2 months out, it costs you $1.50. To go 3 months out, it costs you $1.75. You see how the longer you buy out in time, it costs you more, but it costs you more at a decreasing rate. So it actually works out. That's why I try to encourage people to take more long-term options because you have a longer chance to be right. When you are right, you can hold on to it for bigger wins. And as a bonus, you're not taking on such big commissions by trading in out of weekly options. 45 days to expiration is a sweet spot for options sellers. So that's another consideration. Okay, so with theta decay, this is just theoretical. Just give me the picture. So, okay, let's leave it up. So this is the ideal theta decay chart. Okay, so it's all theta decay. You see, as it's further out, past 90 days, it's very slow, and that's why leaps are great because you can get something 6 months, year out, and it's not going to decay that much. It's really only in the last 90 days that acceleration speeds up, and you can see that at the 45-day mark is where option sellers really find is their sweet spot for selling options. In other words, options decay at an accelerating rate, but it really starts to drop off at 45 days. The Tastyworks folks have done a lot of videos about this where they PowerPoint presentation videos. Go look at their YouTube channel. They've archived them. They've really made a very compelling case why 45 days is their sweet spot for selling. When I followed them and I learned that as an options buyer, it got me to thinking, well, if 45 days is their sweet spot as sellers, as a buyer, that's something I need to avoid. Their sweet spot is 45 days to 15 days because in that last 15 days, they run into what we talked about with Monster, where you get that gamma acceleration. Gamma acceleration is basically the Greek gamma is the speed at which delta changes. So delta is the value of the option per dollar of the stock. And so as you get closer to expiration, the option becomes a lot more sensitive because it's really close to what's actually going to happen. And so that's why gamma begins to make that delta go much faster. And they want to avoid that. And so if you're an options buyer and the sellers, the people you're trading against, their sweet spot is between 45 and 15 days. That's the period that I probably don't want to be in. So if I'm taking any option, it's going to be more than 60 days. Just in general, because I know that at 45 days, I'm going to enter into my danger zone. On the flip side, if you are a short-term options trader, that should tell you that taking those weekly options with that in mind, if that's part of your strategy, I'm looking for the gamma acceleration. Okay, I'm not going to fault you for it if you don't worry about the commissions and the low probability of success. But outside of 60 days is really where you want to take that. And again, another thing that I've talked about time and time again, especially around or before earnings time, is you get some really, really good moves in that month, that 3 to 4 weeks before earnings, and you get the volatility increase. So what I try to do is consider, let me take a step back. I want to stay away from the seller's sweet spot. So 45 to 15 is kind of a bad zone. So we want to be further out. I also want to incorporate 1 earnings, because if I take something based on a technical setup with the price chart, there's a good chance that if it's going to work, probably the reason is going to be a preference to earnings, or maybe if I want to hold it through earnings, I don't particularly, maybe you do. You have that earnings in there to not only inflate the value, maybe give you a good exit, but also potentially capture it. Maybe you want 2 earnings cycles out. So if the first one doesn't work out, you have time to recover. So these are the things I'm going to consider. Whenever I'm taking an option, I want to avoid the dead zone, and I want to incorporate an earnings in there. So it's going to be something incorporating those factors from a technical level. From what I started, I want to think about what's reasonable. Is this kind of a move reasonable? No. This kind of move, a 1 week move of 30% on Tesla, would be an outlier. That would be statistically improbable. Not impossible, but statistically improbable. If I'm looking at ARK, but it doesn't have earnings, so I have to think in terms of the reasonability. So if I want this thing to get in the money, or hopefully before in the money, at around 130, then a reasonable time would be about 6 months. And if you think about it, if we just sort of took the past price action and we overlaid it here, that would tell me that, yeah, if we got a pretty good trend, let's say that we got a trend like this, just a simple little pullback trend, lasts 1, 2, 3, 4, 5, 6, 7, 8 weeks. If I could get an 8-week move, then that covers me there. Maybe the week takes twice that long. Maybe the move takes twice that long. I'm still within the realm all the way out to June. So I can get that move in the time period. I can buy myself enough time to let that move happen. I may not even take this to in the money. I may actually just wait until it gets up to the top of this range. But because I bought them out of the money, that means that I have a better risk reward. That's why I like out of the money stuff. So that's why I made my decision on the Junes here. So it is 5 o'clock. I'm going to wrap things up. You're all very welcome. Thank you for joining. And we're going to see you next week. So trade wisely. Have a good weekend. Bye-bye.